What's good, everybody? This is Sunday, June 28th. I wanted to hop on here real quick and just give you a quick market rundown. Apologies, I haven't done this in a long time. I've been extremely busy with other uh, life events. Went on a great trip to Italy, came back, got a new job, been busy training as well. And honestly, just haven't been too interested in trading the market as we keep going back and forth over these war headlines, inflation, and AI data and all that kind of stuff. So honestly, the market hasn't been too appealing to me lately. So I've been taking more quicker trades when I see the setup and have time, um, adding longs where I can, and kind of just being very defensive versus super bearish. But it's a good point, I think, for us to come in and kind of talk about where I think the market is going and what's impacting us. Obviously, we've had some news come out after the close on Friday that we are now back engaged in missile launches with Iran. Hopefully that gets wrapped up here prior to tomorrow's open. But you could see a red futures around 6, and then when overnight trading opens at 8, you can probably see that dip get bought for people who are playing SPX contracts overnight. So if you're going to buy the dip that comes, I'd say be quick on the trigger, get your couple points moves in either direction and get out, because we're still in this massive headline-driven market. But all right, let's get into it. It's going to be a short video. I just want to kind of bring you guys up to speed. So temperature check here on SPY. We have the daily time pulled up here. And you can see I have my 200 EMAs, my 50, my 20, and my 10. These are my go-tos. And honestly, we have steadily been in a bull market since 2022 bear market was over. To be honest with you, every time we've come down to the 200, those sellings didn't last long. It was always followed by a bounce in the market or some type of event that would send us back up. So now we're trending here again, and we are moving on quite nicely here. So what I want to kind of point out is that we have some really good ranges to work with. So we have obviously this is the Liberation Day drop from April of last year. This is the war in Iran event that brought us back to this level. And now we are trying to find the supports and put in a pretty interesting candle here at the end of last week, uh, here at the 50 as well. So the 50 is acting, excuse me, as our current level of support. All right, sorry about that. Kids need discipline, you know what I'm saying? All right, so here we go. So we have what I was looking at here last week. What started to play out was your diamond top. You have a preference, some good reference points here on these tickers and these whips. I like to take my diamonds in this form. And when I originally drew this, we were on this uptick candle here, right? So now we are here and we're falling to the bottom side of this diamond, right? So you see it. Usually diamond top patterns are followed by explosives move up to new high, explosives move down to catch support, explosives move back up to try to retest it, and then it breaks back down and you're seeing an M form. And then the Fridays when we broke to the downside of this, right? So we'll see where we open up tomorrow. Hopefully we can open up over this 50 here on the daily. But if not, we want to find us some ranges that would make sense for us to start doing some buying. So you want to take that war news back on March 30th is our most recent swing low to our most recent swing high. And you want to see what is catching support here around these fib levels. So right now we have the 23.6 right at 727.58, which makes sense. We've had some wicks here bounce off the 50 and get back over the 23.6. We've had the 50 and the 23.6 act as a level of support here. So we have two points of reference here. This is where you have really good support. We like to see these bounces happen, and maybe this Death Wick cleaned up some of the chart. We'll see where we open, but for now, the 23.6 is where we are. Now, from a doomsday scenario, I know a lot of people don't want to hear this unless you're inputs. We do have the 200 sitting here on our chart. And if we open up below the 50 this week, um, look for bears to try to put pressure on stocks to get us to finally set some stop loss hunting and head down to this 618, which is also right in the 200 range here. So this is what I'm talking about from the downside. So if you want to mark these levels on your chart, 693 to 677, this would be a good place to do on the downside. If you just want some super far out the money put protection, you can get you some end of month puts. Also keep in mind the end of month is also the week that the Mag 7 reports. It usually marks a local top, which has done the last 5 years, and that's also my birthday week. So trust me, I know. Hopefully, we can inverse this. I was talking to one of our great students earlier, Joey, shout out to you. And we were kind of going over some strategies to where I was telling him I would like us to just get this out of the way, right? I would like for us to come down here and just take this out immediately. Just go take it out immediately. Hover around that 50, hover around that 618 for the next couple of weeks. And then when bank earnings start, second week of July, we get some positive job numbers. Hopefully the fighting doesn't continue by then. And then earnings can actually act as a catalyst this time versus acting as a selling event because earnings were overhyped going into it, right? So if we can come in into earnings after already have sold down to this level, I would be extremely bullish and I would probably buy a whole bunch of long positions if that happened. So that's not what you want to hear if you're in short-term calls. But for me, I want this level to hit and I want this type of V-shaped recovery. I think this would be the most bullish scenario that would send us into an 8,000 year because we've already fixed the chart, right? We've come back down, we've tested these levels of support. We hold the 200, the war is over, so the the uh the war will be over hopefully by that time. So by this time we've got all those inflation fears out the way. Warsh has a couple of months of data to work off of. In September could give him what he needs to possibly give us a rate cut if the price of oil doesn't skyrocket back up, right? So this also would track, right? So look at our history here on the SPY with the 200. If we come down here after getting this far extended from it, right? This will set us up for a really robust Santa rally, end of the year rally, whatever you want to call it. However, if we continue to hold these levels, right? If we continue to hold these ranges here, right, and we don't come down and test this 200 and we continue to bounce, then what's that setting up for is another sell the news event towards the end of July when we have earnings and the earnings maybe don't live up to the hype or the bill. I mean, the forecast is more modest. And now we're coming selling down further below the 200. By that time, the 200 might be up here. So we're coming down to this area anyway, right? So I'd say let's get it out the way while we have all the bearish news, the headlines of the war coming up, inflation back up, memories spiking, impacting margins, all the news that's starting to set to extreme fear in the market. I say let's just flush it, get it over with now, so that way towards the back end of July, it can set us up into a run into the midterms, right? So in this scenario for SPY, I would like us to come down. We can buy this 200 with everything we have, and then we have a nice end of the 2026. Alternative scenario is that we do pop back over this 23.6. And if that happens, then the most likely thing I think happens is that we just continue a range bound for the next couple months. Honestly, I think if we continue to bounce in this level, you're going to see this become just a day trader's paradise, right? You would come in here, you would take this high to this low, you would mark some of your levels, change your level, color, whatever you want to do. But you see, the 50 is acting as rejection right now. We came in and rejected almost to a T. So your levels for intraday, for trading tomorrow, if it doesn't change too much, or this week, or for so forth, you would mark this 7,400 area here on your chart to the upside, and then you would come in and you would do another fib here from this to our retrace attempt, and then you would change the color of this so that we can see it a little clearer. And as you can see, where we bounced back to and rejected last Friday is exactly the 618 here, right? So this is reasons why things happen. It says it on the chart. So the chart is acting as it's supposed to so far. So these are the levels you want to mark. So you want to go down there a little bit lower and kind of see what the price and the candles are doing in these ranges. You can see here on the 1 hour, it's respecting these zones that we created. We had a lot of chop and then eventual sell off until the end of the day on Friday. So our levels seem to be pretty accurate at the moment, and our diamond seems to be playing out as we broke to the bottom side of it. Like I said, anything can happen between now and open tomorrow. We can get a headline that the recent activities are finished, and the market can head right back up into this zone. We'll get another headline saying that they retaliated, and we sell back off into the bottom. So as I'm saying, worst case scenario is this would be a trade sideways until we get earnings. That would be a living nightmare unless you're a day trader. If you're a day trader, this is perfect for you. You buy the dip, sell the rip, short the rip, buy the dip, right? So if you're a day trader, you can have a really nice July. I don't have the time to day trade, so for me, this is worst case scenario. Um, the stock that I do like the most right now is Apple. I know that there was a massive sell-off after Micron reported last week. And Apple came out and said they're raising prices across the board for the devices because of the unprecedented spike in memory costs, which tracks, right? So that does two things. That tells you that demand is still there, that these applications for AI is still working, and that Apple feels confident enough that they can raise their costs, protect their margins, and still have the demand be where they need to. Tim Cook, as you know, doesn't do anything has been calculated for. So if he's raising pricing by what he did, he is expecting that demand warrants the price raise, that he has enough interest there, that he could still do that and protect the underlying balance sheet. The good thing about Apple is, as you know, they haven't spent a lot of money in CapEx for AI. So they have a lot of resources to be able to withstand any of these upcoming CapEx crunches or margin collapses because they haven't done that. They've been very frugal. They have partnerships with Intel. They've been working well with the administration. I saw something where they are requesting to buy chips from China that can help relieve some of the pressure that they have to charge the consumers. So Apple doesn't worry me when it comes to a management. Now we did get a sell off here. This was WWDC where people were kind of underwhelmed by Siri. Cool, always happens. But if you zoom out here, every big sell-off in Apple has been a buying opportunity. I can take you through the 2022 bear market. I can take you all the way to COVID. Not once has Apple lost this 200. Even when it came down here for Liberation Day, it bounced. And this is why I took my chance at it. On Friday, I bought some calls for September, 275 calls in the money. It went from 270 to 285, and those calls were up about $600 a contract. Now, on that spike, I added a put to that for those who know my seesaw method and the reasons why. If not, definitely take the class. We are giving away a great special this summer, where all 12 of our classes are given to you up front. So you don't have to wait on us. You can go ahead and watch those, and we'll still provide you with live sessions and training and things of that nature. So, anyways, just a little shameless plug. But when we came down here on Friday, I had this marked on my chart, right? So when my alerts go off and they tell me, hey, Apple is now at the 618, what do you want to do? Right. So when I get those alerts, I'm already ready to go. So when Apple came down here, I was when Apple came down here, I was ready to strike when they hit in this zone. So I came here. As soon as it hit, I bought it, right? And sure enough, we bounced right off of the 618, and now we're trying to retest the 200 of the 1 hour. Now we'll see how this over weekend news with the war and the memory shortage, things of that nature, if it causes us to gap back down. If it does gap back down, I'm taking the profits on the puts that I added, and I'm doubling down on my calls until the 618 is lost, right? I think Apple is a very good company long term. I think they're positioned the best to be able to capitalize off some of the other constraints that the Mag 7 has because they have gone into their free cash flow. Another thing, that reason why I bought is because look at the RSI here on the daily, bounced right off to 30. Apple doesn't stay at these levels long before people come in and start buying the dip. You can see the historical data here. So Apple is my only open position at this moment, and I'll look to buy more if we come down to this daily 200 at 267. If we break the 618 at 272, I will add more size to my put while averaging down to my calls as well. So that's my little quick synopsis of SPY and the current positions I'm in. Hope this was helpful and have a great week, guys. Take care.